Good morning, everybody. We are live streaming right now. We will officially start in about 10 minutes as we go through a pre-market morning prep. And we are live streaming right now. Let me get got a little echo in the back. Yeah, I'm going to finish doing some setup. Please take a moment to look over our daily overview. We'll recover this once we get started. So. And those schedules out in California, they don't understand. They don't like the way I hold the door when I say yes. They act like I've done something wrong and they give me the evil eye. I say, honey, I'm sorry. I'm in a southern state. I can be that's the way it I'm always walking around, just the way that after strangers and the cars passing by. Some people they look at me and say that boy just ain't right. Hey, y'all, I ain't crazy. I'm in a southern state of mind. No change. You can see it in the clothes I wear. You can hear it when I talk. Ball cap, boots, and jeans, and a little southern drawl. I could be up in Ohio or back on the Carolina. No matter what state I'm in a southern state of mind. No matter what state I'm in a southern state of mind. Yeah. Right. We get it almost every night. When that moon gets away, but it's natural. Everybody dancing. Here is out of sight. They don't want me, they don't. They, they keep things alive. Every part of a dancer and love me. That's it. Never fight. Can't dance and stay up till it's wrong the life. Every part of a dancer and love me. Being
Everybody here is out of sight. They don't bother and they don't they keep things loose, they keep things alive. Everybody dancing in the everybody dancing. Everybody in the the island where the shrimp boat tied up in the island. Give me a horse and some beer for dinner every day of the year. I feel fine. I feel fine. 'Cause I'll be there. Wanna go back down and line South City with a 10 cup for a chalice. Fill it up with 2 red wine. I bet you on a honey and single. Oh, down the south, go slide across the water.
Just putting some final touches on getting my screen set up. Ready to find some buyers or sellers.
Get down now. You heard my strange proposal. So won't you get that girl and let's move. I'm gonna be there for the day. Tries to steal away, keep us from. Get up.
Look like Russell's about ready to enter into a demand zone.
Chance. It's you.
All right, well, there we go. There's our opening bell. Good morning, everybody. A lot of activity this morning, whipsaw up, whipsaw down, as reports come out. One second. All right, so one of the first trades, that we're going to look at here, RTY, Russell. Russell's had a pretty good stretch in the overnight. And we're going to look for that first opportunity to go long, see if there's some buyers still left over here from the overnight session. Okay. And we have relatively small risk on the trade. I'm going to place this out there ahead of time. And I know we're hitting the ground running, but I'll slow it down here in just a moment. Okay. So our first trade that we're going to put out there right now is going to be an entry on the Russell. I'll start off with a few micros. The ranges that we're looking at will be 22.48. Okay, that's where I'm going to look to enter long, and then my initial stop is going to be at 22 uh 44. So there's going to be about a 4 point risk on this. If you're trading the minis, that's about $400 a contract, roughly. Okay, no, $50 a point. Yeah, it's going to be about $200 risk. Trading the micros is going to be much less. Okay, so I'm going to start off with just the five micros on this, taking a half position. Got the five set, and I'm placing that order out there, 22.48 long, and then I'll place my protective stop loss down at the uh, 22.44 area. Okay, so we're going to be waiting and watching for that trade set up. I just wanted to get it out there since price was falling right to it. And that'll also be back to a gap fill. Okay. Now, one of the reasons I'm a little more aggressive to jump in on the Russell is as we look at the IWM, the ETFs, IWM, QQQ, Spider, and Diamond. The IWM set to do a more of an exhaustion gap to the upside, and we've had a few of those over the last few sessions where prices gapped up in the direction of the trend. Okay. I also want to point out that the Qs and the diamonds have what we call is a runaway gap. Okay. Now, got to know the difference between your gaps, whether it's a downside or upside breakaway, whether it's a runaway gap, or whether it is a exhaustion gap. Okay. There's just three main types of gaps that we use in helping us pick a direction to make a trade. Okay. Um, Good morning, Adam. And yeah, good morning, everybody. It was kind of a last minute doing a live stream today, but usually we do our community trading room where everybody has mic privileges and everything is open. But today, being right before a long weekend, a shortened trading day, we'll look for, we decided to do a live stream. So the NYSE closes at 1 p.m. Eastern. Indexes were trading in a narrow range prior to the economic report. We have a lot of economic reports coming out, a Fed speaker, and several bond and bill auctions today. Natural gas report comes out at 10:30. We'll watch to see if there's the reaction on that. Uh, as we come back and look at the Dow 30 stocks, we um, we can see that the volume is actually picked up a little more than usual. Okay. Now we monitor the Dow 30 volume to see if it is light volume, normal, or heavy volume in the pre-market. Okay. 1 second. Oh, come on, so many damn pop-ups here. All right. And we do have a trade. Let me come back here. We placed an order out there on gold, looking to go long about that 3308 area. We did that in the pre-market. Based on the economic reports that had come out around the 8:30 time, the 8:30 Eastern, we saw a very big spike up on the US dollar, 10 and a 2-year yield. Okay, now Secretary Treasury Bessent was coming out today making a lot of comments about interest rates. So the pressure is coming from multiple sides right now about the uh, interest rates and, pushing the Fed to cut rates. And they're looking at the next meeting. Okay. Now, with that speculation, and right now it's pretty low odds. Okay. But with that speculation, we want to anticipate that about 5 days before the FOMC meeting, okay, the next one and upcoming, they're going to be kind of running prices up, buy the rumor and sell the news type thing. We've noticed historically that starting about 5 days before an FOMC meeting, not minutes, but meetings, okay, that the market tends to rise about 3.5, 4% prior to that meeting, and then after the meeting comes back down about 3.5, 4%. Okay. So we're going to be watching for that lineup that the Fed meeting's not set for another week or two. Uh, and we'll be right in the middle of earnings season as well with the stocks, which will create quite a bit more volatility. Uh, and let's see, I want to close that down. That'll create a lot more volatility around those earnings reports. Okay. So right at the moment, we're waiting for the market to settle a little bit. We do have a long trade set up on gold, waiting for price to come back down to demand. We also have Russell, where we're waiting for price to drop into our demand zone. Okay. And that demand zone, it was set up right around looks like about the London Open for that. So we're going to look and see if there's any more buyers down at that range and look for potentially a price move back up. Why am I bullish on the Russell? Well, the Russell finally closed above the daily 200 moving average. Okay. And we're starting to see a rising 50 moving average, which is going to set the tone for that golden crossover. Okay. So as more develops, we also know that this current administration under President Trump does favor a lot of the small businesses. So as the big beautiful bill passed, there was a lot of interest, a lot of price movement up over the last couple of days on the small cap stocks. Okay. Now, keep in mind the Russell 2000 is the bottom part of the Russell 3000 index. It also houses a lot of national and regional banks. Okay, so you want to have a good idea of what the bank index is doing as well when you're participating in trades. And we'll look more at that once the session opens. Okay. Apple showing flat and Nvidia showing up. Let's take a look at all of the large market cap weighted stocks. Got Apple, got Broadcom moving up, Nvidia, Meta up almost $9, Tesla making a move up, Amazon, Alphabet's flat, and Microsoft up a little bit here. Okay. So as far as the NASDAQ being up as much as it is in the pre-market, currently the stocks are not supporting where the futures are trading at. Okay. Now remember, futures are a derivative instrument. They follow the cash market. Okay. Yeah, they are anticipating more rate cuts going towards the end of the year, maybe September. Okay. But the way that the economy is going right now, you know, and we're going to look to, I'm not going to say the economy, but just the way the markets look right now, we could potentially see a melt up scenario as we have in the past when the big banks and institutions were kind of net short or bearish, and they're going to be caused to cover. Okay. Now, some of that evidence can be seen as we are looking at the large or the equity indexes on the higher time frames and seeing that this rally up on the daily chart, okay, is getting quite extended. Okay, S&P just made another all-time high. Okay, S&P futures. Okay, we have 1, 2, 3, 4, 5, 6, 7, 8, 9 up days in a row, or 9, 8. Sorry, yesterday was the 8th up day in a row. Okay, so if today closes up, we may expect Monday and Tuesday to be up days. Okay, it is extremely rare that we have 13 consecutive days up in a row. Now, look what's starting to happen down here with the 50 and the 200 moving average. Okay. When the 50 crosses up through the 200, okay, we often see a pullback in the market, but this is considered the golden cross. Okay. And the last time we saw that golden cross where the 50 crossed the 200 simple moving average to the upside. Okay. A good example of that was back in 2023, about February, March. We saw that golden cross here. Markets were moving up. They got the pullback, and then they started on their journey, which had produced a pretty strong bullish run. Okay. We got close to things changing about October of 23, but again, the 50 stayed above the 200. The Golden Cross is a very significant, and also the Death Cross is a very significant picture that traders look at. Okay. So anybody that is long-term bearish is going to be most likely is going to start to change their way that they're looking at the markets. Okay. Now, with the markets going up like this, the possibility of us having a rate cut starts to gets pushed forward a little bit more. Okay. I think they're still waiting to see how the July 9th tariff enforcement comes into play and get some readings from that. Okay. A lot of stuff going on. Okay. But now we're going to look for some trade opportunities, and I want to look at the Dow 30 stocks because the Dow is a price weighted index, whereas NASDAQ, Russell, S&P are market capitalization weighted. We take the Dow 30 stocks and we take the number of Dow 30 stocks that are greater than 94 cents, and we have 8 right now. We have 0 Dow stocks that are negative. Okay, so we 8 positive. We multiply the 8 by 2 points to get a value of cash. Okay, so cash equals 16. Okay, and futures are trading at 16. So right now, not a lot to trade at the moment. When we're looking at the measurement of cash versus futures, when we're looking for opportunity, we want to see if futures are trading at a discount or traders or trading at a premium. And the way that we measure that is we see if futures are at a discount below the cash market or futures are at a premium above the cash. Right now, futures relative to the cash market are even. Okay. So there's a lack of potential momentum without another economic report or even breaking news or an announcement, a tweet from Trump and so on. Okay. Also note that the volume has been increasing, but it's still fairly light for what we're looking at as far as the price move on the equity indexes. So my point with the S&P having a very spectacular today, starting off as the ninth potential up day in a row, okay, um, has been moving up on lighter and lighter volume. This is a negative divergence, why I'm still planning to trade to the upside, looking for demand to continue that move up until proven wrong. Uh, but we're getting in that nosebleed area, okay? And we got to pay some attention to that, okay? All right, crude oil, natural gas, crude oil. The Globex range is kind of on the narrow side relative to the daily ATR. Using heating oil as an odds enhancer. And let's start off with a trade on crude oil using the open range breakout. I'm going to mark the opening range, which we use a 5-minute chart for the opening range candle. Okay. I do anticipate crude oil to go up about that 67.98, roughly right around in this range here where we have marked for a short opportunity. Okay. But early in the session here, we might have an opportunity if heating oil continues to move lower. Okay, you can notice that the heating oil is putting in a topping pattern and is more on the bearish side of it. It's not at the beginning of this last uptrend, okay, potentially starting to roll over. Heating oil is a lead indication of what to trade on the crude oil, okay? With this picture on heating oil, I'm leaning a little more on the bearish side for a short-term trade for the open range breakout, looking to take it to the downside. Now, I'm going to be very defensive on this and take a small position, okay, because I'd rather see price come up to a supply zone first before breaking and coming back down, okay? So I'm going to execute this trade starting off with, we'll just do 5 micros and I'll have my stop loss at 67.42 as we look for a short-term trade opportunity. Okay. Yeah, 42 coming in with my stop loss. Okay. I recognize my potential risk on the trade is $145. That's within my trade plan. I usually try when I'm doing the live streams out here to keep my risk within about that $100 to $200 range, and that's inside of that. Okay. So as price moves back down, I have to be aware of this area here where we have potentially some fair value gap area. Okay. Um, and I'll be leaning on heating oil as that, looking for it to break lower as well. Okay. You can notice heating oil getting slight uptick and the uptick that we're seeing on the futures. Okay. Nat gas, we have a natural gas report coming out today. I do want to come out and look at the larger time frame on nat gas. Okay, larger time frame nat gas 60-minute chart. We do have a supply zone up a little bit higher, 3.688. Okay. OPEC and other energy companies also have been talking a lot about nat gas in the earlier this week. Okay, looking to increase output in the upcoming summer months. Okay, so we'll keep an eye on that. Bigger time frame still looking for supply. Demand is still way down below. So we're right in the middle of it. So short-term trading at the moment. Other things to watch for. We did see a pretty big reaction on the dollar. Looks like Putin is to hold a phone call with Trump today, probably earlier in the session. I do want to bring up, we're just about 10 minutes away from the market open. With the reaction that we saw on the dollar and the yields, it caused a big reaction on the FX markets. Okay. Now, price did come down to our zones and with the Aussie dollar, British pound, euro, um, but I didn't have an opportunity to take the trade. Okay. It just happened way too fast with the reaction. But what it does expose is that the picture that we see on the price chart reflects where there are some unfilled institutional orders. After all, price can only go down until it finds a large stack of buy orders and can only shoot up until it starts matching up the sell orders. Okay. I do want to keep an eye on copper, looking for more of a confirmation entry if copper is going to start to move back to the upside. Okay. If you're more aggressive, you can take a trade entry at 5.167 area, placing your stop loss 5.147. Remember, this pays $12.50 a tick. So even though the range looks small, it's a pretty high risk when you're trading the mini or trading the copper contract. Platinum has showed the first drop to find buyers, came back down to the origin of the last move up. There is a small zone right in here, but where price dropped into. Okay. So we found some unfilled orders. Okay. And we'll see if these buy orders are going to be stronger and push back through this area up above 1401, 1415. Platinum moving back up to that range, we would look for potentially a short position counter trend trade. Okay. Our equity indexes, okay, and bonds and notes and Bitcoin. Bitcoin is breaking out of a daily bull flag area. May have, since this trades 24/7, okay, we might see even a gap when the next session opens as far as the futures go. The 10-year dropped into a demand zone and the 5-year, while the 30-year still has a little bit more to the downside. Okay. So we got a big reaction negative on the 5 and 10-year bond notes. Okay. And we got a big reaction on the 10 and the 2-year yield to the upside. Okay. Let's see, NASDAQ. NASDAQ and S&P continue to push higher. The charts on the S&P, the small time frames, have been a little muddled up. Okay. So I'm in kind of the waiting mode with the S&P and the NASDAQ charts to find a good solid entry. Okay. I need the picture to reset up. Okay. But as far as the other trades that we're looking at, we still have an open order on gold, waiting for it to pull back into the zone, and also on the Russell, where we're looking for that entry just after the open. Okay. Now they're giving a preview of the market open order imbalances coming out. Okay. There seems to be more of a buy imbalance on the S&P. Top stocks, CNC, GEV, Salesforce, Oracle, UNP. Wow. On the top selling, we do have State Street Bank, Berkshire Hathaway, Goldman Sachs, Disney, and Walmart. Okay. The top sell imbalances. Now, order imbalances are when we have a stack of orders, whether they're buy orders or sell orders, okay, for the market on open, okay? So these guys are staging their orders to say, hey, at open, I want to buy these or sell these at the open, okay? Now, none of this makes a trade. It just shows the potential activity. If you look inside of this, you'll see that, hey, there's a buy imbalance of 208 million and there's a sell imbalance of 165. Buyers over sellers. That's where we're seeing the order imbalance. At the market open, much of these orders are going to be processed as a where we see that volume coming in and they match up those tickets, leaning more to the buy side versus the sell side. Okay. So in order to be a buyer in the market, we like to see price come back down to a demand zone. Okay. We want to buy low, we want to sell high. Okay. So therefore, after the open, we'll look for price to drop down, see if there's any more buyers on the Russell. And as I pointed out, it's the charts on the S&P and the NASDAQ are a little more difficult to read and splice into this. Okay. So I got to be patient with the Russell and the S&P until we get a good solid setup. Okay. We have potentially a lot more buying down below. This one has already been used. Let's get it off the chart. And let's go to 5 minute. Yeah, I just don't have a setup on the S&P. Okay. Come out to the larger time frames again. S&P looking to make an all-time high. Now, Stock Traders Almanac does support a lot of this, what we're talking about as far as the market tendencies, or historically has had up sessions prior to the 4th of July. After the 4th of July, they've had more down sessions statistically. Okay. So my expectations are an up move, but finding our way into that up move is what we're looking for right now. Okay. NASDAQ futures. Let's take a look at that. Qs are gapping up. And as we come back to the exchange traded funds, Qs are gapping up as a runaway gap. Okay, so I'm bullish for the open. Okay, especially on the Qs and the diamonds. But that doesn't mean I'm just going to jump in right away. Okay. The SPY and the Russell are looking at a exhaustion gap, whereas the diamond and the Qs have consolidated sideways, a gap above these areas, currently trading 553. Yeah, so we got a big gap up here on the Qs. This is implied as a runaway gap. Okay. And runaway gaps are in the same camp as a short squeeze. Okay, so I love the questions, and just observe what I'm stating right now. Again, much of what I'm talking about is not making a trade right now. It's understanding the trading environment. If we have a runaway gap on the Qs and a runaway gap on the diamonds, okay, those are going to be a little more difficult to get in long at this point, okay? Because prices have not come back down and found buyers, okay? On the S&P and the NASDAQ, you also notice that we are gapping outside the prior session's high and low. Also, a gap and run scenario. Okay. If we were gapping inside, okay, or if price was still trading inside the prior session's high and low, we would expect the gap to fill today, and we would have different trading environment. We wait for zone entries and such, okay? Now, breakout trades when the markets are up this much, and let's just double check the cash market. We have right now, right now we have 6 Dow stocks that are up over 94 cents. 6 times 2 is 12. We have one down. Okay, so that drops it to 11. Okay, so sorry, let me recalculate that. We have 7 Dow stocks up, one down. That leaves 6 net. 6 times 2 is 12. Right now, S&P futures are overbought, trading at a premium greater than 12 points. Okay. So when we're going to go long, we want price to pull back into a demand zone, trading at a discount to go long, buying low and selling high. Right now, if you're getting into the move up, you might catch some momentum. Volume is still on the lighter side, so be prepared for some of that whipsaw. Russell, still waiting. And still waiting on gold. Okay. And let's come back to the Dow. The Dow, we were looking at a potential runaway gap. Or, yeah, runaway gap on the diamonds. Okay, so let's look at the Dow. I'm going to drop down to a smaller time frame. See if we can find a way to get into this. Dow has also had a pretty significant run on the daily chart and is not at the beginning of an uptrend. Okay. So we know the risk is going to be a little more elevated. And for the Dow, I'm not finding anything on a time-based chart. So let's drop down to a tick-based chart. See if the picture changes for us. Now in trading, it's really, especially as intraday traders or momentum traders, okay, it's all about that picture on the price chart. Once we recognize a pattern, a structure, that picture on the price chart, we start to assess the risk. We kind of remember what and how we felt the last time we saw that picture, whether it was success or failure of a trade. Okay. And we incorporate that into our decision-making process. So for intraday traders, it's a lot about that picture. Okay. And we use those pictures to find where we have potential areas where the demand was built prior to the move up. Okay. Now, in my live streams and in my trading sessions here, um, you guys can ask questions. Okay. It's not just about me, you know, preaching and talking about things. And I tend to teach a lot more when there's nothing to jump into a trade on or while we're waiting. Yeah, we have a little move down. Still waiting for a little more commitment on heating oil. Heating oil is going to be a little chancy here because we made lower highs and higher lows. So heating oil is pinching off as a triangle. Okay. A break to the downside would be good for our short trade opportunity. Okay. And a break to the upside is probably more of the uh, direction it may go because of the prior move into this continuation pattern. Okay. So I have a little more risk on the crude oil at this moment. We'll just wait for the market to settle. Okay. And look for some clues. Heating oil often leads what crude oil does. Okay. We use heating oil as a lead indication. Okay. Dollars backing off. We might see the FX markets moving up, but the 10 and the 2-year yield are holding higher. VIX is lower. Let's look at the internals. VIX is trading at complacency, no fear. The trend is low, implying that there's more declining volume over advancing volume. There's more declining issues over advancing issues. When the trend is low, below 60, trend low, time to go, means you're kind of selling into this up move right now. Okay. Trend high and the market's dropping. Trend high, time to buy. Trend low, time to go. Okay. And we're right near that lower range where we're getting some indication from the NYSE that there's more downticks and down volume than upticks and up volume on those stocks. Out the gate, the tick, which is the NYSE tick, showing the number of upticks over downticks. Okay, we haven't entered into a buy program. We haven't entered into a sell program. Okay. Generally, when we have good momentum moves is when the tick is in a buy program or a sell program, and we look for trade opportunities. The tick kind of in that neutral between negative and positive 500 is, we're not seeing that momentum come into the marketplace yet. Advancing issues over declining issues for the NYSE are fairly equal. Okay, we're a little bit outside the no trade zone, and we're kind of waiting to see what's going on. Okay. Wow, nice move up on the S&P. I didn't have a way to get into that, so it didn't fit my trading plan just to jump on board and go for it. Okay. And yeah, I don't have a place to take a trade short yet. Also, okay. We do have a leg base, leg base. Okay. We're starting to see that there are some buyers stepping in. That would be the zone that I would be looking for an opportunity to be a buyer if we get a pullback. Inside of that leg base, there is a small fair value gap. Okay. I want to mark that area. If and when price retraces back down to this area, I expect there to be some leftover buy orders. So as I was making a comment earlier, it's during when I'm teaching or putting things together, please ask questions. If you have a comment, a question, state it. It's important that as traders, you have the opportunity to express what you see. Okay. Then you're taking ownership of it. Okay. And it's not that I'm always right. Okay. I might have missed something, but as I'm using my trade plan, I'm looking for right now on the S&P for price to pull back to about 62.91 as a place to look for a long opportunity. Okay, this is where the buyers stepped in. There were more buy orders than sell orders. Price is rallying up to find sellers. It's not that everybody is buying. Now we can take a look at the volume over here, and on the matrix, you can see that this is a light volume price move up, okay, which are often retraced. All right, let's move on to the NASDAQ, okay? Thanks for asking. Okay, so we got NQ. I just want to check the stocks. Meta's up quite a lot. Now on the Qs and the diamond, I'm not looking for a gap fill. Okay. since the NASDAQ futures follow the cash market, I always want to keep and it's a large market cap weighted. I want to keep an eye on the large market cap stocks. If all the large market cap stocks are moving up, well, the NASDAQ's going to move up as well. And we'll also see that price movement on the Qs. Okay. All right. So we got a tick chart. I'm not seeing anything on a tick just yet. And let's go to our time-based chart, dropping down. I'm going to start with the 10-minute chart and start working my way into it. Okay, drop down to a 5-minute chart. Here we go. First bounce on the NQ, looking for this range. This might turn out to be a really good example. Notice we have the leg base group of candles. Leg in, base, leg out in a base. And inside that leg base group of candles, we have a fair value gap. Okay. Now the fair value gaps are that 3 candle pattern. And using the leg base, we find that price often comes back down to that area to find some unfilled orders. Okay. Can anyone make a living at trading futures? It's difficult. Okay. There's a lot of emotions, a lot of challenges, not necessarily with the charts or the information on the charts. It's more so with the individual ourselves. Okay. You must develop a very solid trade plan that you trust. Okay. And you must stick to those rules. Even when it means waiting for the trade, you got to stick to the rules. Okay. And that's where I struggle a little bit too. So, I mean, it's a great question. And I would even say, no, not everybody is cut out to trade futures. Not everybody's cut out to trade Forex market, crypto market, options, stocks. Okay. It all depends on the individual themselves. Okay. Now, if you have a good trading plan and good risk management, you have an advantage over the other traders. But you have to remember that this is a very disciplined game that we're doing here. And we're looking for very specific price patterns that we've documented in the past for a potential trade opportunity. There's always risk in every trade. And that's why I stated out earlier on crude oil what my max risk was. I have to acknowledge my risk is 145 bucks on crude oil. Am I willing to take that risk? Now, this is part of the trading plan. I try to, when I'm doing live stream and things like this, my trading plan says, you know, kind of think about the other people involved here. Okay. I don't have to show big numbers. I have to show accurate trades and help educate people where to look for the potential trade opportunities. Okay. We also have to come up with a couple different strategies. Like this strategy here. Why did I take this trade short? Well, this is one strategy we talk about with the open range breakout. Okay. ORB. Okay. I use the first 5-minute candle right after the pit opens. Okay. Now, remember, futures are derivatives, meaning they have a cash product, and then we have the futures products. Okay. So in the morning session at the pit open, futures may be trading above the cash price or below the cash price. After the open, markets balance out. Cash and futures tend to balance. Okay. Now, we look at futures products a little different than most people do. Okay. Yeah. Don't, no, I like that. Hopefully I said the name right. Apologies if I didn't. Um, there is a lot of study. Now, at the market institution where you guys are watching, I can shorten that learning curve, but it's not all on me. Okay. What helps people learn better is by starting off finding picture perfect trades that have already happened and then studying them. Okay. Finding all the little characteristics. And this is where I arrived at the leg base group of candles. Okay. In recent days, we have also started to refine those zones if they were kind of large ranges where we anticipate the unfilled orders are at. And why do we anticipate unfilled orders? Well, the picture on the price chart, when we look at the picture perfect past trades, shows that price often changes. So it direction. So we're looking at this area, but we're using information on the left-hand side of the chart. Now, why is this important? Well, banks and institutions, when they step into the market to make a purchase or a sale, there's not often all the inventory there for them to make the trade. So they have a range in where they can buy or where they can sell. And that is confirmed from the guy upstairs, okay? The investment banker that's putting the trade together. Sends it down to the floor traders to process the order. The floor traders have that range. Now, when they place that initial order, okay, if there's not enough orders at that point, price is going to race out of that area. Okay. Remember, all this price action is price moving up based on more buy tickets than sell tickets. When there's no more buy tickets, price will drop back down to find where the buyers are located. Okay. It's a different way of thinking and different way of looking at the market. But when you take everything away from all the emotions and all the slang and stuff, what's really going on behind the scenes? It's just orders being processed, right? The charts are a reflection of that transaction that is already completed. By the time we get a move on the chart, the trade is already transpired. Okay. It's really when you start looking at underneath, what are the gears and things that are happening here? Where are the best locations to look for long entries versus short entries? Okay. And are you willing to wait for those trades to manifest and come to you? Okay. I love the questions. Uh, Adam K. Says, don't live in the US. I only trade Forex. Do you trade CFDs on the US markets? Okay. The strategy does work on larger time frames, depending on the products that you're looking at. Um, as far as the strategy looking, okay, you can see that when we go through different stocks, let me just come over here. I had a bunch of stocks there. I use the same technique, the same process. We're always looking for the picture. Now, here was a great trade off of here. We had the leg base, and we had a fair value gap inside of it. There were no buy orders, so with on that earnings announcement, price dropped, and this is the picture over on the left-hand side of the chart. Okay, there's a little more details to it on a smaller time frame, but we desire to have trades like this. why did price stop going down and shoot back up? Yeah, it's the information on the left-hand side of the chart. It's unfilled institutional orders. Okay. This is how the big banks and institutions control the market is they have buy orders below, sell orders on top in case anything starts to go crazy. Our markets are very controlled. Okay. I like the questions. Great job, everybody. You can use the areas that we're looking at. The bank index is just continuing to rock to the upside. We do have the stocks moving up. Apple and Nvidia are also a good odds enhancer. Got a short on the NQ. Okay. Be careful on that. I didn't have there's nothing wrong with taking a short on it, okay? It's just that it wasn't my setup, okay? This is where, earlier question, can anybody make money in futures? If you don't have discipline and you don't have a good solid picture of what you anticipate to be a good place to take risk in the market, you're going to be chasing everything. Okay. And that can get very expensive. Okay. We need to see that picture on the price chart. Okay. Where the last time there were buy orders or sell orders parked, what did that picture look like? Okay. And yeah, I can go back. Let me just double check here. And I'm just trying to find a couple of examples here. So that picture of where we're looking for buyers or sellers is we have the information on the left-hand side of the chart and then price returning back to the origin of that move to the upside, okay? I want to find a good one here. Yeah, I want to focus more on the trading instead of jumping into getting all the picture. But see, the information over here on the left-hand side of the chart, okay? When we identify a place we want to take a long trade or a short trade, this is a successful long entry. Okay. But we need to look for the information over on the left-hand side of the chart when we anticipate that the banks and institutions are behind that. So having that picture on the price chart and saying, wow, that's a trade I would love to have taken. Okay. What is the information on the left-hand side of the chart that makes that trade a success? Okay. So cool stuff. I'm gonna still look for some opportunities to make trades right now, but it's like I kind of got into that waiting mode. Now, you have to ask yourself the question, like on this Aussie dollar setup, let's open this up. We see that price came right into that area. Now, how many would have liked to have gone long the Aussie dollar at that point? Okay. I mean, that would have been a fantastic entry. But what evidence did you have on the left-hand side of the chart that provided you the right location to look for that? Okay. So there is a method and a process. There's an accumulation of orders. When price leaves this area very quickly and strongly, okay, that means they didn't get their orders filled completely. So when price returns to that area, we have an opportunity, okay? But it does take a fair amount of time and many examples for you to prove to yourself, okay, and verify this information. Sorry for that. Yeah, multiple time frame analysis. And when you're using multiple time frame, that's an excellent point. Okay, when you're using multiple time frames, get outside of all of these numbers. What about a 59-minute chart or a 38-minute chart, a 6 minute? Okay, so many people are captured within what the computer program shows them, which is they're never getting the right exact picture. When you start going off the different time frames, you will get a very clear picture for what you're looking at as far as a trade opportunity. Okay. And it's important that that picture is picture perfect. Okay. So you might see that, hey, he's using a tick chart this time. He's using a time-based chart. Okay. Why, what's the magic in a 16-minute chart? There's no magic. It's just that when I'm looking in the microscope, I need to turn the notch up or down just a little bit in order to get a clear picture of what's going on. Okay. Boy, crude oil is not moving much. Thanks for allowing me to express that, the picture on the price chart. It's important, and almost, I would say 99% of well, let's just say 90% of the traders out there, when they're looking at the price chart, they're looking at a picture, and then the emotions come in. Okay. As we're, watching the NASDAQ and the S&P, it's like, well, it's not coming back to me. Okay, well, this is where I want to take the order trade to the long side. If it keeps going up, I don't have an opportunity to get into the trade. The FOMOs come out. Okay, well, yeah, but it keeps going up. I get it. I have the FOMOs too. I would love to have gotten into that long trade, but in the morning session, it didn't provide that opportunity. And I've gone to a 1500 tick looking for that opportunity. And let's see, it looks like we have another leg base, leg base. Okay. But this zone to buy on a pullback is at a higher risk place. Okay. Keep an eye on the news here. Trump's tweeting out there. What a great night it was. One of the most consequential bills. Okay, we got that bill passed. We'll be speaking to President Putin of Russia at 10 a.m. Eastern. Okay, which is now. Much better than expected in our surveys. The economist looking for the unemployment to climb. So he's really touting his numbers. He wants that rate cut. Okay. So things should quiet down just a little bit from the phone call. He's getting on a phone call. Hopefully he's not tweeting as much when that phone call's out. Okay. Russell. And if we go back and start looking at, some of the smaller time frames on the indexes, you see all it's done is kind of whip up and down. Now, I will acknowledge that there are some traders that are fantastic that are taking scalping trades. I'm not that style. I want to get into a trend and see where we have a large profit potential. Okay. So my expectations on a trade are waiting for price to come down to a demand zone or go up into a supply zone for a trading opportunity. Using multiple time frames, larger time frame, I see where Russell is moving up to. On a daily chart, I see that the Russell has finally closed. Yesterday was a close above the 200 simple moving average on a daily chart. Okay. IWM, which is the exchange traded fund, moves before the futures do. We see that the IWM has a demand zone back down around 221. So if IWM has to come down, so are the Russell futures. Remember, Russell futures follow the exchange traded fund. They don't lead it. My first opportunity on a small time frame for a potential trade is at this level that we just pointed out between 2248 and 2244. Okay. Based on the picture on the price chart, based on the information around the London Open, there were some buy orders sitting there. If price comes back there, I expect there to be some buy orders still in that, in the context of an uptrend. Okay. So yeah, keep asking questions. I can explain things. I mean, for the most part, we're just waiting for trades to come to us um, at this moment. So I do like to share this information and help other traders. Helping other traders to see the picture helps me because I might have been taking a couple of shots at the market already, trying to anticipate a move or speculate if I'm kind of trading in a closet by myself. Okay, we're all kind of in that range. Okay, but if we have a community that we work in and we trade with, and we all have kind of like-minded entries, and we're able to express that and share that information. Often it keeps us waiting because we know the right thing to do is wait for our trade to set up rather than saying, well, I think it's going down. Let me take a shot at it. Okay. I think that was a great question. Earlier, can you make money trading futures or you can make a living trading futures? You can, but it requires a great deal of discipline and focus and a very specific trading plan. S&P on a tick chart, 2000 tick. Okay, one of the time frames that fits the style of trading I like. Let's see, studies. I'm gonna look down, find that leg base group of candles. We got a couple of them along the way. These areas will be used as places where I want to see a pullback in the context of an uptrend. Hey, that kind of sounds familiar, doesn't it? But the FOMOs, I'm missing out on this whole move. Well, you're right, so am I. But I didn't have a solid place to get into it. Okay. So we are creating these little leg base group of candles. Okay. But we haven't had a pullback into a range where we could execute a trade going long. And we haven't had price run into a supply zone and for a place to take a trade short. Okay. NASDAQ. And for me, hi, Candlestick. Where do you foresee NQ will turn around to the downside? All right, I like that question. Using Fibonacci price extensions, and I'll keep it on a. Let's do this here. Let's do this. I'm gonna use a 20-minute chart so we could look for Fibonacci price extensions. I will include, just to help you understand what I'm doing, is a moving average. And let's just switch that moving average to a 50 simple. Now, what I'm using the 50 simple moving average for is to identify a price swing, highest point above, below, using that as a mean for these different swings in price. Okay, so I have minimum three swings from high to low crossing the 50. Now this one is still underway. Okay, using the Fibonacci price extensions, I'll go from high to low, and we will turn on those price extension lines. We're going to look for a confluence where we have multiple levels matching up. The Fibonacci price extensions: 113, 127, 1618, 224, 2618, and 314 as far as extensions. Using the last three completed swings, okay, we'll look for where we have that confluence. We just ran right through one, okay, a good confluence area. And the next one right above, 23,083. Oh my gosh. And then we have multiple, all three have lined up between 23,148, 23,205 on this time frame. Okay. So we've already taken out this one. The next levels I will look for as a Fibonacci price extension for the NQ, 23,083, and then up to about 23,150. Okay, those are the price ranges I would anticipate price to change direction. Okay, this is not a trade opportunity per se because it's not a supply zone. Okay, it is where I anticipate price to exhaust itself and then pull back to the buyers. Okay. Now, in a very small time frame, let's look at we can watch when price arrives at that area. My gosh, look at this. How many are ready to buy in, go long right now? Neither. Okay. You know, we looked at those market conditions. Remember, the diamond and the Qs are in a runaway gap scenario. Runaway gaps are hard to jump into. Okay, you can go down to a smaller time frame, but you're still taking that risk. The IWM and the SPY are in exhaustion gaps. We talked about this an hour before the market opened, okay, or 30 minutes before the market opened. We laid out the playing field. We knew and are seeing things play out. Where our frustration is I didn't have a way to get in. Okay. Yeah, I'm frustrated with that too. These are some fantastic price moves. But let's take a quick look at the matrix on these, okay? And the reason I want to take a quick look at the matrix is I want to see the volume on the matrix, okay? Is this heavy volume, light volume, or is this normal volume, okay? Often when we see big price moves up like this, it is not a whole bunch of people buying, it's a lack of selling, okay? S&P futures are trading at 43 points. We have two down stocks that are negative, and we have 15 that are positive. Okay, that those are the 13 times 2 is 26. Cash market equals 26, while the futures are trading at 42. Futures now are trading at a very big premium relative to the cash market. Futures will balance out with the cash market. They do so right around the session open where we saw they were balanced and near the session close, okay? S&P futures right now are making another all-time new high, okay? All right. Yeah, I get frustrated on days like this as well because I'm not able to capture or be part of that run because I didn't get into it. And I took off my trade yesterday that I had on the Russell because of the way that the reaction was. I had an entry on the Russell when price retraced back down yesterday and took it up. And once it started pulling back pretty hard, I took off my profit. Okay. Crude oil. Yeah, we're still not getting a good movement for the open range breakout. Okay. So I'm going to continue to let this trade work. Okay. Because I see a little more of well, right now I'm seeing that heating oil is resting on that support. Okay. If heating oil breaks that support, we'll get our move back down on the crude oil. Okay. Oh my gosh, look at that. And what you might be thinking now is, oh, it's never going to come back down here. Well, it it may not today. Okay. But that's again comes back to the earlier question, can you make a living or can you make money trading futures? Okay, the answer is yes, but are you going to chase price with a highly leveraged instrument? Okay, even though you have protective stop loss, um, it can get pretty, you can get wiped out pretty quickly. Okay, let's take a look at our large market cap stocks. Nvidia, new high. Microsoft pushing for a new high. Amazon is in supply at the moment. Apple looking to break above resistance. And Apple has been the laggard in this whole big move. Okay, building a fresh accumulation of orders. Apple breaking out to the upside is going to pour fuel on the fire. Broadcom up near the all-time highs. Alphabet, Tesla are still pretty far away from those all-time highs. Okay. It looks like the Russell's into a tick chart, a supply zone. Let's go back over to the Russell. All right, so I don't have anything on a time-based chart. I'm going to change this picture to a tick chart. See, when using multiple time frame analysis, you're going to have information gathering. Oh, look at it, it's right there, just starting to come out of that. Okay. You're going to have multiple time frame analysis, but you have to have the same process when you're looking for a trade. Okay. It's got to be the same picture when you're looking to execute or apply a trade and manage the risk. Okay. Other multiple time frame analysis will include trend direction. Okay. So I'm going to take a more aggressive trade entry here. I'm getting in a little bit late. We still, with about 2 micros, I still should be within my trade parameters. I'm more willing to take the trade long back down here where we had it. It's way too late now. Dang it. Now, realizing I'm late, I've watched the market go up. What's my discipline here? Well, yeah, we don't chase price. Okay, well, I guess we're back to that waiting mode. Okay. So it is a little challenge unless you're watching multiple time frames and such. This did have the right picture. We had a leg base group of candles. Okay. I didn't recognize that on a time-based chart, but when we changed that picture to a tick-based, the picture was there for me to potentially have a trade. Okay. But I'm still waiting for this zone down here to go long. We already have an order waiting. Okay. Now, typically these areas here, these zones are used one time. Okay. So it's not like when price comes back up here, can I take it short again? In some cases, yes. Okay. I think we're going to be seeing a pullback now after the this run up. It's hard to do, it it's hard to not try to take a poke at a short right now. Okay. But even when we go down to smaller time frames and such, and let's just try it. We've got the NQ. Let's go down to 1 minute. Okay. We just completed a leg base. Potential.
Order filled.
We got stopped out on crude oil. We have potential leg base, group of candles right at the top. Okay. Often that leg base can be seen at the beginning of an uptrend or beginning of a downtrend. When trading supply and demand, it is the first picture that we're looking for as far as the creation of a supply area. There's not enough evidence yet to take the trade short. It's just getting a small pullback is all. Possibly some traders taking a profit. Okay. So in a supply and demand trade, we would have to see if there's more sellers up here. That means price needs to move away from this leg base, and then return back up to the supply area. Okay. Retesting it. The retest would confirm and also help us manage the risk. Pretty relatively small risk. We got about 4 points as far as the fair value gap in there. Yeah, it looks like we have another leg base right at the beginning of the uptrend here. And nothing along the way. Okay. So our first evidence here is price coming back up to 23.53. We'll place a stop loss at 26 or 23.63. Okay. We got about 10-point risk on this trade as we start off. Okay. So I'm going to start off with 2 micros.
Order filled.
So in short, stop loss is going to be at 63. The risk on the trade is $42. Okay. Potential reward is pretty substantial as we look for price to come back down to demand on this time frame. Now, just because I took the trade does not mean it's going to be a profitable trade. There is risk on every trade we take. Once you recognize that risk, and if it falls within your trading plan, you can take that risk. Okay. If it is outside your trading plan, then I would highly recommend that you don't take it. Wow, nice job. I was long MQ and got out. Nice job. So what are we starting to witness? That there's not enough sell orders up yet. There's a lot more buy orders at this point in time. Okay. Now the buy orders may be just short traders buying to cover. Okay. Buying to cover. So we need to wait for another setup if this trade takes us out. Yeah, they're seeing all, it's going to be easy to sweep the shorts out. Because like many of us, not many of us took the long trade, not like myself. Okay, so we're anticipating where we might have a good short entry. Okay, and this entry is pretty high risk. There's not enough evidence that there's a whole bunch of sell orders yet. And understanding the risk, we are being
Order filled.
more aggressive. Okay. So now what we have to wait and watch for is either another leg-based group of candles. Okay. Or we need to see price basing. Okay. How do we, well, let's see, let's go back over in Q. Wait a minute. We had that forecasted area. Yeah, we're just shy of that. So the 23,083 is where we had that forecasted Fibonacci projection. And we're at all-time highs. The buyers right now are in my, if we go out and look at the trend, the buyers are short covering, not just jumping into the market and buying. Okay. Notice that the volume or the number of transactions, the ticks, are getting, equal number of upticks over downticks. Things are quieting down pretty quickly. Okay. The trend is low. Okay. The trend precedes the market change in direction by about 20 minutes. Okay. So we're making new highs on the NQ and the S&P. And let's see, we should be anticipating here right around about 7 minutes that the market should start to uh, pull back a little bit based off of what we're looking at with our dashboard here. Meta has pulled back quite a bit. Microsoft, let's get a picture there. Microsoft also pulling back. Broadcom made a new high. Yeah, we're starting to get a little mixed up on the, you look at the ones going up, 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 and then we have a couple that are going down, or just one that's going down, which is Meta. And then we have Tesla, Amazon, Google, all pretty much flat. Okay. Now, with the large market cap stocks doing this behavior, we're starting to see the futures do this behavior. Okay. And we start making the association that stocks move first, exchange traded fund moves second, and then the futures adjust. Don't forget it's short. Yeah, it is a short trading day. We put that out there this morning. NYSE closes at 1 p.m. Uh, let's go take a look at some of the other stuff that we have. Canadian dollar just hit supply. US dollar and the yields are starting to move back up. So let's come out to the Canadian dollar. And we see the price has come into that supply area. We are trading the September contract, CDU 25. Okay, I'm going to take this short at the market, and my stop loss is going to go at 0.74014. One contract.
Order filled.
Buy stop market is in place. I have $110 worth of risk on the trade. And we're looking for that opposing demand area. And using that leg base as a profit target, we'll look at the profit target around that area. Okay. The trend does not tell us whether the market is going to fall or rally. Okay. Great question. Okay. None of these tell us what the market is going to do. They're showing us what is happening right now. Okay. With the trend, what it measures is advancing issues over declining issues, and it divides those numbers into okay. Then it also takes the advancing volume over the declining volume and divides that. Once you have those two numbers, it divides it into each other. Okay. So it's inverse of what is explained, okay, when we're looking for an application. When the markets are shooting to the upside and the trend is low, it implies that there's more downticks, down volume, than upticks and up volume. The implied is they're selling into the up move. Okay. Who is selling in? NYSE stocks. Okay. The whole New York Stock Exchange. Okay. So when the market is dropping and the trend is high, it shows that there's more upticks and up volume over downticks and down volume. So when the trend is high or reading is high and the markets are dropping, we're looking for a buying opportunity because the banks and institutions are tapping on the brakes and they're starting to buy into the drop. Okay. It's like putting the brakes on the car. Okay. When the trend is low and the markets are ascending, it's the same thing. It's like they're tapping on the brakes. Okay. And selling into an up move. Okay. Now, the short covering is what's making the market go higher at this point. Because most of us would look at charts and the indexes right now and say, there's no way I would take a long position at this moment. Okay. If I'm going to go long on this, I would wait for a pullback, right? But on the S&P and the NASDAQ, there's no evidence that the market is going to sell off yet. We haven't built an accumulation of sell orders. Now, the Russell did have evidence of that. I was getting into the trade a little too late. These sessions are always recorded. Okay. We keep them for about 3 months or so. They're posted on our website. Let's see, we're still waiting on this one for price to come back to the buyers. And if you have any questions, just let us know. Reach out. We're pretty approachable. Okay. Yeah, there's a lot of things that we cover in our pre-market routine, and that's what I've done here. Is if you look at a lot of the bullet points, okay, you can see that we have a very regimented way that we collect data to understand the trading environment. Okay. And once we understand that trading environment, it makes it easier for us to uh, project where we're going to take a trade long or we're going to take a trade short. Okay. Now we had a good picture right over here of a short trade on the Russell, but as you guys were watching, you noticed that I was starting to chase that. Now I caught myself trying to chase it and then kind of backed off. Okay. We have to understand those things about how we look at taking trades. So I'm going to head over to our Discord room. And if you want to join us over in our Discord room, we have a voice channel over there. We'll trade for a little while longer, waiting for some opportunities. If you want to access that, just could we post that in there? Oh, wait. We do have some specials. Can you give me that? I gotta find it here 1 second. So we do have some promotions that we're doing as well for July 4th. Okay, really a big discount on our packages here for live trading room, platinum package. Make sure you use the promo codes. Write down the promo codes right now. Okay. We also have one of our affiliates we're working with has some really great promotions going on as far as prop trading. So if you're new to trading futures, make sure that you start off trading with a prop firm, taking the risk off of your a trading account. Okay. There are some big discount deals going on with Elite Trader funding for the evaluations. Do we have some promo codes that we could put out there if anybody wants? Okay. Oh, you already got them. Okay, you guys were taking care of that in the chat. Okay. Now, I'm a big fan of making sure that you guys stay safe. And while you're learning how to trade futures or learning any other um, product, the proprietary trading firms will allow you to practice. Okay. They will also be paying you once you fund or once you pass their evaluations. Okay. Elite Trader Funding has a lot of great stuff coming out that's going to be. Uh, I can't say everything that's coming out, but there are some things that are coming out that are going to be fantastic. Okay, that I'd encourage you to go out to Elite Trader Funding website, look around. You keep up to 100% of your profits. They are expanding where you can have overnight trades or swing trades. Okay, but you have to have protective stop loss, of course. Okay, and there are many other things that are coming out, immediate payouts within 48 hours, or they pay you $1,000. Okay. But go and get all the details. You can get funded in as little as 1 to 5 days. You can also elect to, it's a little more expensive. You can jump right into a SIM funded trading account and start getting paid right away. Elite Trader Funding, get out there and start looking around. Don't risk your own money while you're learning and putting these tools and things together. Okay. All right. I'm going to wrap up this session. If we can post the Discord link inside of the the live stream. The name of the prop firm was Elite Trader Funding. Let me bring that up here. EliteTraderFunding.com. Okay. And if you have an interest to learn and get your eyes trained, check out our website. Let me bring that up as well. There's a lot of cool stuff out there, and most people, themarketinstitution.com, we have a lot of different courses that to help you. And most of our course content and things that we put out there is specifically designed to train your eyes what to look at. Okay. We have recap and review sessions each week where students can engage with the instructors. We have a lot of different content out there, just tons of stuff out there that you can go and look at and view. And there's also a lot of stuff on YouTube. Themarketinstitution.com. Okay. Yeah. One of the things we mentioned today was the gaps, and you can come in and get access to what type of gaps are out there. Okay. There we go. Oh, can't do that right now, but everybody have a good 4th of July. We'll see you Monday, and we'll see you over in the Discord room later. Oh, one more thing. Use the code TMI to get the best discounts. Okay. So when you sign up, use the promo code TMI. Okay. The Market Institution. Okay. All right. I'll see you guys over in Discord, and we'll have the voice channel going. Everybody has voice and mic privileges there. So be safe today. Bye now.